Hi Ron, it's Stuart here again. Hope you can hear me loud and clear. There seems to be two streams open at the moment, but hopefully you can hear me okay. Let me know if you can't. Things look okay. I think sound okay. Actually, I'm not sure. Let me just check the settings. Oh, audio looks no. Actually, audio looks okay. Camera looks okay. As okay as I can look currently. So it's Bank of England day after yesterday's probably sort of dovish sort of stance ultimately from Powell at his press conference later. I'd switched off before I went and watched the press conference. He was very straight with the press. He didn't get flustered at all. Very clear. The interesting comment I thought from it really was he's still talking about he actually brought up transitory inflation being transitory. They were caught out really badly last time on that and had to dial back on this idea that inflation was only spiking up a wee bit. It took a long time for it to come down, and it remains quite sticky. So the outlook continues to be coloured by obviously the impact of tariffs. He never really got drawn on tariffs. I'm just going to wrap up from last night before we move on to the Bank of England in a minute. We refused to get drawn into obviously the politics of the thing. But the inflation, the outlook was inflation was going up, both the PCE and the CPI. Growth was coming down, so that they sort of counterbalance each other to balance higher inflation. Counteracts the weak growth. But that isn't really what you want. There was one journalist asked, "Is this back to the 70s?" And he was very, I think it was Yahoo Finance asked him that. He pushed that back quite aggressively on that when not in a rerun of the 70s. But again, he wouldn't be drawn on fiscal or political comments last night. Dollar really, this is sterling here on the screen here. Let me just make the chart a wee bit bigger and me a bit smaller. Sterling this morning or yesterday ahead of the Fed, we went over 130, but we couldn't hold it into the Asian or the start of the European session this morning, and we've been short, or this 1 hour chart here has been triggered short here this morning at 7 o'clock, and it's moved down lower and into 129.36 is our low ahead of the Bank of England. We're expecting a bit more hawkishness from the Bank of England this morning. Actually, let me just recap what's happened this morning. If we look at the calendar, my calendar for some reason is not functioning this morning, so I'm going to have to leave that. I've gone back to the Forex Factory calendar. Quite a lot of news flow this morning, as I put up on the Discord group. So a big miss for employment in Australia and the UK this morning. So a big rise in the claimant count in the UK, big rise in employment change in Australia. So bites there, although unemployment rates remained unchanged in both countries. But it's relatively negative spin on that. That's weird on sterling this morning. We saw that big move down in sterling on its rise in inflation. Earnings also still remain very robust at 5.8%. And again, last month they were upgraded to 6.1%. So although people are finding it hard to get a job or find a job in the UK or find a second job or a third job, those that are employed are doing okay, thanks very much. And there's quite a diversion in the UK economy here. Lots of people suffering, lots of businesses suffering quite badly, high streets suffering quite badly, cost of living still biting, lots of taxes and annual increases coming at the beginning of April as well in the UK. It's the end of the tax year as well here in the UK. A split in the economy. So if you got a job, you seem to be getting paid relatively well if you've got a job that's in demand. Other than that, things are really quite tough still for lots of people in the UK. Across into Europe, in Switzerland, the Swiss National Bank, they went as expected with a 25 basis point cut. In his press conference, the new chair there, Mr. Schiegel, talked about monetary confidence being now appropriate. If inflation starts to tick up in Switzerland, they have the tools to deal with it. Ms. Lagarde in Brussels at this ECB meeting didn't really have anything new to say this morning. Nothing really moved the market on that. So we're now focusing on the next 10 minutes and the Bank of England. No rate changes, virtually nailed on. Obviously, we didn't. Obviously, just going back to the Fed last night. Obviously, there was no rate change from them either, and that was very much anticipating this balance between growth down and inflation up. Continue to rattle. The president who came out this morning, I don't know if you've seen it. President Trump came out saying we need to cut rates. So perhaps he's bringing the Fed into focus. And they're both talking about the transitory nature of inflation now, but it was quite clear, Powell, that it didn't get drawn on how much of it will be impacted, the expected inflation hike just being transitory because of the tariffs, but how long the tariffs will last for and how big that inflation kick through will be. So will they continue to be, on countries like Canada and Mexico, their immediate neighbours? 2nd of April is obviously the big day now when the reciprocal tariffs on everywhere else comes into play. Lots of chatter with India apparently overnight about trying to cut those tariffs down. But the recession word, stagflation, still running around in the US economy. Across the Atlantic in the UK, similar sort of problems we've got here. Rates are still too high, according to many hawks. We had that big split last time on the committee. However, we are expecting more cautious from somebody like Mann, who's actually flipped from being quite a dove to a hawk there here in the UK. So rates expected to remain unchanged. There isn't actually, it says here, there's a press conference. Actually, the press conference is a bit, there we are. Bailey's press conference, but I don't think there is a press conference out of the Bank of England today. It's just the rate decision, and there's no forward-looking data. So it'll be just the statement, and we'll check the change in the statement as it comes in about 5 minutes time. But a quick look at the charts. I'll say sterling was down and it's been into pork at 129.36. We said this morning, sort of pivot area here from on Friday where we were down here, rallied on Monday, and so we got over 130 yesterday and again yesterday, and we've cooled this morning though here against dollar. So the dollar's a wee bit strong. If you look at the Swiss franc as well, where's Swiss franc gone? Here. Swiss franc has weakened, or the dollar's strengthened really this morning and firmed up. So Swiss franc's weakened on the cut in the rates, confirming the cut in the rates. And we were, what were we? We were long this, weren't we? No, we were, we were trying to go short this, and we got stopped out on this one this morning here for Swiss franc positions here. I don't know, maybe trade the Swiss franc, but that was the Swiss franc as they've been in news this morning. Aussie and Kiwi are weaker this morning. Aussie's at 62.88. Big move down here this morning. And Kiwi also weaker this morning too. Of the weakest, Kiwi's much more significant move down. So dollars on the front foot. Back in Europe, the euro also under pressure, giving up 109 this morning and moving into 108.78 this morning. We've been as low as 108.35 this morning. So dollars very much on the front foot. Just a quick look at everything else. Crypto, Bitcoin sits at 85,400 this morning. So we've had a rally this morning. Sorry. No, we haven't. I'm sorry. 20th, we've actually dipped, haven't we? We had a rally yesterday. Sorry, let's go back to the daily time frame. These charts sometimes are a bit messy. So that's our strong rally yesterday. We were talking about that yesterday as well. This trend line we'd put in. So we'd rallied into the 20-day moving average, and we've bounced off it this morning, basically. So we're testing the top half of that triangle as well. So we see if we break out of this, where we go potentially to the upside. And again, if we look at the triangle, if you do the triangle from there, we could go back over the 100,000 technically here on that sort of support line there. But we'll see how that pans out as well. But the first test of the 20-day moving average today at 85,700 has been rejected, and we're sort of down, or we went through it, we're down, and we're back to it now. So there we are. That's our trend line. We have to reject off it. We're back to the 20-hour moving average as well, and so we'll see. But that's biased a tad to the upside. Crypto. As far as indexes are concerned, we had a strong day yesterday. The DAX, we had an open position on the FTSE that hit its initial target. I closed it all out actually ahead of the Bank of England today. So we were long here from Monday. That's hit first target, I think 44 points there for the FTSE. But you can see here we're sort of consolidating highs, which is relatively positive here on the hourly chart, the 4-hourly chart, a wider channel here, supported by the 20-period moving average this morning, and again, here yesterday, and again this morning. So that's still holding support, and the daily time frame still looks relatively okay, having been in to test the 20-day moving average yesterday and again this morning. So are we? It's a move up. It looks like it's weak. It's running out of steam a tad, which is why I closed out the long position we had this morning. See, it's a bit weaker, but it might be trying to edge higher. The FTSE, I don't know many of you trade the FTSE. We're still long the DAX, but that's out of the money at the moment. We got in here. That's our target, and our stop loss is down here, so we're out of the money significantly. That was to do with some of the news that came out of the EU meeting, where they're talking about reducing, putting back reciprocal tariffs against the Americans. So the DAX on an intraday basis, we could look at that quickly, has come down quite significantly. So let's have a quick look. If this is going to update, I don't think my calendar's updating for some reason. No, we'll have to sit with the Forex Factory calendar for now. So the sport split would be interesting. I think they might all be in line again with this one. This comes out, but let's have a quick look on that. So data pending. Can you see all that okay? You can see the pending flashing there from the Bank of England. Yeah, 4.5%, no change there. The vote sometimes takes a bit longer to come through, but let's sort of see if I've got immediate news flow either on I've got the no, because it's 12 o'clock, all the news shows obviously run to the news. Let's have a quick look at one of my other feeds here. Yeah, no change. I think it's what's popping through there. Mark it up. Yeah, Bank of England is unchanged at 4.5% as expected. There's no other particular comments. The vote actually 8-1 as opposed to 7-2. So that's probably missed mine again. I'm just waiting for the statement from the. I'm trying to get on the Bank of England website here now to summarise it for you, but it's on. It's not updated. I haven't got access to it. So many people have. So no particular shock from the Bank of England there. So we just go back to sterling. Might have tipped up. There we are. As we might expect. There's nothing of a particular surprise. The only change was the voting intention, which came in at 7-2 as versus 8-1. Vote to cut bank rates by 25%. Dingra again wanting to cut rates, be a bit more aggressive to cut rates. So it's 8-1 to keep things as they were. She wanted a 25 basis points cut there. Okay, summary of the statement. Actually, it's sitting now. Just bear with me a second. Substantial progress. Oh, it's interesting. Substantial progress on disinflation that allowed for gradual withdrawal of policy restraint while maintaining restrictiveness. Global trade policy uncertainty has intensified since last policy meeting. That's another statement, isn't it? Other geopolitical uncertainties have also increased, and indicators of financial market volatility have risen globally. That's the sort of bullet points I've got here in front of me. Substantial progress on disinflation, interesting phrase. Gradual policy withdrawal, restraint, maintaining restrictiveness. So that would suggest they should have cut rates from what they're saying there. Global trade policy uncertainty is intensified. So obviously this worry about things outside of their immediate control is why they've sat pat. Other global uncertainties have also increased, indicators of financial market volatility have risen globally. So yeah, nothing of any particular surprise out of London this morning. We'll see how that pans out as the day goes on. But the weaker sterling has come back a wee bit. So sterling has sort of bounced some 30 points, 30 pips here, go back against the euro from 129.50 zone to 129.70. So a 20 pip tick back up in sterling. So we're back into this sort of channel, and that higher time frame strength of sterling against dollar will probably still maintain. If we've got some of the other sterling crosses, we look at euro pound, and that's continued to weak. Euro is weaker, so pounds picked up. So we've had this move down all morning. So conversely, a strong dollar, weaker euro. So euro pound moving back into the 83.50 channel here. And again, it's this quarter, this big pivot down here. 83.50 was as I put this on at the end of last year, at the final quarter. Sorry, it's 2023 pivot, wasn't it? So we generally, again, a sterling much stronger. If we've got the daily time frame, euros had a bit of a run up on the back of that German and fiscal announcement, but we've rolled over this week, and we're down again today into a key area, which is coinciding with this pivot from a year or so ago, but it's also a key local shorter time frame, the daily 20 and 50 day moving average, big support area around about that 83.50 for euro pound. If we look at pound against the Japanese yen, it was down quite significantly more on the strength of the yen. Where's pound yen gone? Pound Swissy. I'll stick it in here. I can't see it. JPY. There we are. So again, a weaker one this morning, and again, a bit like against the dollar, it's bounced here following the data. If we look at the trend as being nicely low into this an entry area. I don't know whether we were long or short. I think we were long here, weren't we, from the 12th? It doesn't really matter, but it's a big round number, 192.25, and we've bounced off that. So it's a target area, closed out this downtrend, and that's so some nice pips from this morning if you were trading that to the downside from whenever that triggered. Well, it was last night, not this morning. A big down candle there at 6 o'clock last night, and down we've gone. And bouncing back up 92.72, so another 20 pip move here for pound against the yen, the guppy. Yeah, pound generally weakening on that. So if we go back to the FTSE, see how the FTSE has reacted. If we just go back to the 5-minute time frame, I guess relatively nonchalant, really. Yeah, so it's looping lower on the wider implications of the, we had a strong day yesterday, and indices, you can see here across the board are really negative today, this morning. So 15-minute, yeah, so there we are. We had a tick up and a tick down, so we've that's that target we got to this morning, and we're back under our entry from Monday, and we're back to it now. We've bounced off it again, so we'll continue to loop to the downside. So a bit of a non-event out of the UK because there's no press conference. The statement, I thought I'll pick some bones out of it, but the full statement is just coming through on my terminal now here as well. So let me read some more details. That's substantial disinflation, that's splitting the vote. That's a bit of a surprise. But global uncertainty and nothing there. Business survey indicates general continuous weakness in the growth, which we know about. A gradual and careful approach to further withdrawal of monetary restraint is appropriate. Okay, that's a bit of a tweak. Let me just read that out again. A gradual and careful approach to the further withdrawal of monetary policy restraint is appropriate. If inflation pressures are pushed down, it warrants a less restrictive path of bank rates. So suggesting they will go again into the later on in the year. But if there is a second round effects related to the near-term increase in inflation, this would warrant a relatively tighter monetary policy. Monetary policy will need to continue to remain restrictive for sufficiently long, so to put back in the phrase sufficiently long, until the risk to inflation returning substantially to the 2% target in the medium term have dissipated further. Remember, inflation's ticked back up in the UK. The rate decision is, as you would expect, the main language in the statement hasn't changed that much. However, there's a subtle sense that there may be some less dovishness. Yeah, that's what we were saying before, wasn't it? Less dovishness and perhaps certainly more hawkishness than certainly the Fed have been with regard to the balance of inflation. So a gradual and careful approach to the further withdrawal of monetary policy restraint is appropriate. So again, they're talking about this balance between growth and inflation, a bit like the Fed last night, but a bit more nuanced here in London. So FTSE is down, having been higher today, earlier this morning into that 87.40 area we had as our target, and we're currently at 86.82. Let's go back to the cable rate, sterling 129.70 now, from that test of 129.36 ahead of the data. So that's looking to hold on to the gains on the Bank of England and the run down for cable. Again, if we just put an intraday fib on there, that's definitely our high, isn't it? Looks like that is probably the bottom ahead of the major news of the day for this pair. Well, I'm saying it's the major news is Bank of England. We've still got jobs in 30 minutes. Very, very busy day, so anything could happen. But we're already back to the 50% level, so that would be some targets on there. So next upside target, nicely coinciding here on the 15-minute time, is the 61.8 Fibonacci level. The key golden ratio sits at 129.82, so that will be my next upside target there. And as you can see here on the 15-minute time frame, that also coincides with the resistance area on the 50 period moving average. So if we just go up, so that's a interesting resistance area, but we've got to the first one already, 129.74. Can we hold that? 129.75 is obviously a big round number. Let's try and break that if we're going to go up to the next one at 129.83 on an intraday basis. But bounce, quite a significant bounce for sterling. Really on probably no news, to be honest. Perhaps a tweak more hawkish than expected on that. The news about a careful approach to withdrawal of monetary policy restraint is appropriate. We were trained to restrict sufficiently long, so that's more dovish than hawkish. But sterling's bounced back a wee bit, so we may struggle if we don't break 129.75 to actually get to 29.85 to the upside. Obviously, there's lots and lots of data still to come. We're 20 minutes away from the weekly inflation data. Inflation data, the unemployment claims out of the US, and that's remained remarkably strong. Even though last night we were talking about this idea of jobs being sort of in balance, is what Powell was talking about yesterday. If we just go on, I know we do this every week, but if we just go on, you see how strong this jobs market is in the US still. I would argue claims still remain quite low. But obviously, the layoffs that start to come through from the government might start to have an impact on that as well. There was some argument. I was reading something yesterday about the percentage of private new jobs is weaker than many anticipate. So it's been propped up by government hirings. That was obviously a spin from the new administration. The actual data there doesn't actually really back that up, to be honest. So private jobs market growth has been quite strong. But this reflecting in the claims, the new weekly claims, people claiming for the first time, it's still relatively low. Well, historically very low. You can see this obviously and it's pre-pandemic levels as well. We're down to this 220 level. Levels at the moment. So yeah, the US market remains still fairly sanguine, as Powell suggested yesterday as well. Philly Fed also, remember, that's very volatile, so don't perhaps read too much into that at 12:30. And then we got existing home sales. Remember the surprise we had earlier in the week from new home sales with that Canadian data as well. So that might have more sway at 2 o'clock this afternoon as well. And then there's a speech by the relatively new governor, Macklin, from the Bank of Canada. Canada's getting a bit more headlines than it would like. The new Prime Minister, Carney, has talked about calling a snap election. I think it was the 24th of April, I think it was, this morning. So from a leader of the Liberal Party that sort of seemed somewhat wiped out under Trudeau's premiership, has sort of actually come back to life and may actually hang on. But the Conservatives still have quite a significant lead in the in the opinion polls in Canada, but certainly Carney has reignited the Liberals in Canada. So on the political front, Macklin obviously more about the monetary policy situation there at 5 o'clock. So plenty more data to come. Sterling, he's struggling at that first fib level, but some profits taken on there. But sterling's bounced back against the dollar, but the dollar's still relatively on the front foot elsewhere. I think let's have a quick swig of a quick scan of my currency strength indicator. Yeah, Kiwi and the Aussie remain weak. Yen, dollar remain on the front foot, and the sterling's ticking up a wee bit on that data. Euros, Swissy, bit negligible. So sterling, yeah, let's see if we can have a go at this 129.83 later in the day, but we'll see. The claims number could obviously turn that back on its head, and we could be back to test the 129.36 low of the day if we breach this 129.65 area here. That's what fib traders will be looking at. They're the key fib levels at the moment. So let's have a quick look at where we are with our open positions. We're having not a great week again, but that's trading for you, my friends, isn't it? So far, we had cleared out quite some significant positions this morning. Obviously, the gold trade is still very, very much in the money. 1,000 points to the upside on that. 100 plus points. 1,000 points on a points basis, but percentage-wise is very strong as well. But these were all 1 and a bit % losses this morning. So we had a winner on the Aussie Swiss. We've seen the sterling, and then a raft of losing trades. The dollar Swiss was off 42. Dollar CAD off 64 points. Pound Swiss, which we had 2 positions open, both its stop losses, their respective stop losses, one for 41, one for 26. And the CAD Swiss, there was this one here. We were short that one, and we closed that one before it got to a stop loss at -10, that one. But gold, the DAX, the US 30 and the S&P 500 are all still open, but not looking great, let's be honest. If we just look at those, so we just go back to not energies, but metals. The gold, our gold trade is gold trade. Our gold stop loss is here at 3,020. But this morning we've hit yet another all-time high. That's the 15-minute chart. We look at the hourly chart. Another all-time high this morning for gold. So the uncertainty continues to swirl. This is post-Fed at 3,056 this morning. I said our stop loss is here at 3,020. We got in down here at 2,917. So lots of pips live in the market at the moment on that. Our index trades that are still open at the moment. The UK, we say we closed that one. The DAX is out of the money. I thought we showed you these. I showed you these earlier. We got quite close to our target. Yeah, I can't remember where we opened the 17th. Yes, on the 18th, wasn't it? And it's moved down since then. It's moved down 2 legs this morning on that news from about reciprocity of tariffs from the EU perhaps being delayed. So that's weakened the DAX this morning. We're still in that one. It's closer to its stop loss than it is to its target, that's for sure. So it's not looking great. S&P 500 is that was in the money. It's now out of the money. Having had a strong day yesterday, but we got the daily time frame. We are long here. These coloured candles are wrong, so we were long here from Monday. We're looking to get to here. Our stop loss is down here. So you can see we've got the 4-hour time frame. So that's out of the money. And what's the other one that's still open? DAX, the Dow. Oh, the Dow. Did we look at the Dow? I don't know if we looked at the Dow. Not that one. Must be on that one. Yeah, that one. Yeah, we were. Oh, that's right. We had an additional. So we were long from the 17th. It's hit target 1. That's still open, and we added it. That was a half position. We added a full position last night, but again, that's come out of the money currently here. So that was our additional entry last night on the here. Yeah, so an additional position at 41,996 last night. And so they're all still. So I've got 1, 2, 3, 4 positions currently still open. As far as potential trades for tonight is concerned, obviously we're still a long way from that. The main end of day system, I've got an Aussie pound Aussie looking to go long, I would guess. Yeah, that's looking quite strong. It's at new highs. So yeah, that might open up before that, but that's looking to go. It's so where are we? That's at way high. So pound Aussie at sorry, let me show you on the chart. Pound Aussie is looking to go long tonight. And that might have triggered just since the data, but so you can see here the 4-hour candle, the 4-hour trader would have been long from this morning, yesterday morning, I should say at 5 o'clock. But this is if I drill this into the daily time frame, see this is like new. We haven't been up here for a long time. We got to the weekly time frame as well. So this is another one of those buying, at the top of the market, but things that are high, as I always say, can go higher. So it's very strong few weeks for sterling. The week at Aussie continuing, so that's looking like a buy tonight at this roundabout where we are now, 2.0626. That's the only one that's looking like it's triggering so far tonight. Obviously, all could change if that reverses quite steeply. All sorts going on the other faster moving platform. Got Aussie CAD, CAD Yen. I'm not going to run through all these because there's loads of CAD Yen, Aussie. Sorry, let me read Aussie CAD. CAD Yen, Swiss Yen, Euro Oz, Euro Yen, Euro Kiwi, Euro Dollar, Pound Aussie. We already mentioned about Pound Aussie, Pound CAD, Pound Yen. So it's obviously all to do with the major banks, the Swissy and the national and the Bank of England. See how it all pans out later on, because there's still many hours to go before the close of business today as well. But the DAX is looking like that. That's looking like it's a short. The Nikkei looking like a short potentially. Yeah, on this faster move. So although the higher time frame, the daily time frame is still long. The DAX, the faster moving position, given the amount of sell-off we've had so far on the DAX. Is looking to short. The Nikkei, Nasdaq also short. There's loads of them potentially tonight, so I'll have to take a bit of a filter to that and see how many of those we can take, and how much the lot size will be. Points per pip, as I call it. But if we take all of those, the rule is you should take them all, but that looks like too many at the moment. They may all disappear as the influence of the Bank of England and the Swiss National Bank starts to fade later on in the day, and we get some more data out of the United States. So I'll just hang on for the 12:30 data as well. We've got the Philly Fed and the unemployment claims. Guys, if there's anything you want to have a look at, let me know. We'll just hang on for a few more minutes until that data comes out, and then I'll wrap this up for the day, and I'll see you all again tomorrow for Canadian retail sales tomorrow, similar sort of time, 12:30. So Bank of England, in summary, have left rates unchanged as expected. So they're still at one of the highs of the. Sometimes Forex Factor have a little calendar here showing the major crosses, but at 4.5%. Bank of England, the Fed, at the highest of the major currency countries, and worried about both central banks, the Fed last night and the Bank of England this morning, both worried about obviously inflation ticking up, growth being declined. Although there's no obviously we had the dot plots last night, and we had the outlook from the Fed. There's none of that from the Bank of England today, and indeed there is no. Although this says that Bailey's speaking, there is not a press conference today. I'm not sure. This is unusual for the Forex Factor to get this wrong, but no, there's no Bank of England press conference today. So we're at 4.5%. Caution remains. The byword, worried about inflation ticking up, growth and sticking down. So disinflation still remains the case, with rates at 4.5%. So voting was the only surprise where we got Deringa again voting for a cut of the rate to 4.25 from 4.50. So gradually declining path of tariffs of rates, but it's is what Bailey said, but it's not actually happening. Gradual and careful approach to easing is appropriate, is the other highlights here. But I say the one that caught my eye was this talk of further withdrawal of monetary policy restraint is appropriate, and gradual and careful approach. So gradual and careful approach is what's being picked up by many of the news sites as well. So 5 minutes to unemployment claims. As we saw before, it remained really quite positive here. So this move we've seen up in sterling may get impacted from the other major news of the day. So let's go back to sterling. So as we can see, it's here on the daily time. So it's the weekly. It's had a really good run. The daily remains bid as well here to the upside. We couldn't hold 131, so we got to it this week. So that's key. As we come down the time frames, we can see we've weakened today, as we saw earlier. But there we are. We've rallied and we've given up. So we're not. It doesn't look like we're going to get to the 61.8. It's come back down quite significantly and back under the 38 as well. So perhaps anticipation of stronger jobs out of the US in 4 minutes time, but we'll see how that looks like. But that still remains to the downside today, although that trade there on the hourly chart, that short there would have been closed out as we've gone back as we've gone back over the middle line, the middle moving average. That's the rule with trading this strategy. So you would have got short position there. If you'd kept it on ahead of the Bank of England, which would have been a bit risky, you might have taken out before that and got a better price, but it's come back and you would have taken out at the 9 period moving average there. So still a successful hourly trade to the downside for sterling today, and now waiting for the next move on this particular time frame. So similarly, the 15-minute trader would have been, short here, touched it, I haven't gone through, and he would have got out again ahead of the data there at 129.56, having got in short at 32 earlier on this morning at 4 o'clock. If you're up there manually, if not, obviously this is automated there on that time frame, and ignoring the worry of the data. I mean, again, it would have automatically triggered long here on the data if you were, taking into account these major announcements, the banks. So whether you'd actually would have taken that or not, I would question that. But it was looking quite positive, and now it's come back down. So that's given up the ghost on that, which really sort of makes more sense, given that there was nothing really of any significance in that post, other than a bit of a tweak and a change in one of the voting intentions by one of the members of the MPC. So we've got a minute to the US data of the day, the main US data, the unemployment claims, and the Philly Fed. If we just quickly look at Philly Fed, remember Philly Fed, a bit like or very much like the Empire State earlier in the week, can chop around all over the place. And see, it's very, very choppy. We had this big outlier here. We went to 49 here in earlier in the year. At the beginning of the year here in, was it February or January? January, wasn't it, when we just completely mad number. So you can see we chop around quite a lot, but we are sort of biased positive the last few months, but it was only in December and November when it was negative again. So it does move around an awful lot. So be careful with how much you read into that number. But I say it's coming around. More importantly, the new claims and continuing claims. Let me see if I, because we got a better view on our, try and just do today. See if it's going to work. Is it going to work? So, oh yeah, it is going to work. Anyway, I've got my calendar. I've got our calendar back now. So the continuing claims, as we say, we're back under that 1.9 million, but showing some signs of firmness in that one. The initial claims continue to hold at this 220,000. Remember, we had that 20,000 lift a couple of weeks ago to 240,000, but it remains quite robust. So see if that's coming out. So there we are. Which ignore. So 12 for Philly Fed. So it's better than expected. Still positive on our little calendar, and the claims in line with expectations at 223. No change to previous month. And if I just look at the continuing claims on our calendar here, if I just review or refresh this one, I was taking everything in. So it's sent me the whole week now. I just wanted today. So here we are. So 223 continuing claims actually again ticked up, but only by 2,000. That's not anything to get too uptight about, actually, although it is up 60,000 from last month. Right. So the continuing claims were down by 10,000, revised last month, but the continuing claims for this week was up 2,000. So a bit of a mixed message there, but this still a strong jobs market, I would argue. 227 for the average 4 weekly, so it's ticked up a little bit as well. Philly Fed's better than expected, but again, I don't read too much sway into that one. So it's overall, that's again that's positive dollar data. So we've got continuing strong jobs market, some positive data from Philly Fed. The fly in the ointment might be the continuing claims continue to ramp up. I can't show you that calendar on Forex Factory. It hasn't actually got a continuing claims on, but that is starting to tick up. And Yeah, current account better than expected. Only 304 billion. Trouble to take some credit on that, I'm sure, later on. So again, you would expect stronger dollar on that. Indeed, here we've moved down again. Sterling's given up what looked like a next upside target at 29.82 with that 61 point fib. They couldn't actually hold the 50 fib on the 15 minutes, so we were down and we're down again. So next, the low of the day is now coming perhaps into target again at 129.36. Might be a step too far, but that's the next downside. So sterling, but the dollar stronger on that jobs data, and euro continues to unwind here on the 15-minute. Obviously not impacted by the Bank of England, but we've moved lower here as the US data has come out. The earlier low of the day is undoubtedly going to be tested 108.34 as we continue to give up that key 109 handle for euro. Dollar CAD 143.80, so it's holding at day highs at the moment. 143.80 for dollar CAD, and Aussie 62.80 again, floundering at day lows, 62.85 at the moment. So stronger dollar might have added to the further decline in the gold price, $30,036 at the moment. In fact, we have ticked up a tad. That's 15 minutes. So no, sorry, it ticked up and now it's it's stalled at the 20 period moving average in this current time frame. But on that 15 minute, looks like it's ticking up, but not too bothered on that. So there we go. It's a busy day. It's been a busy day. So Bank of England's, let's just summarize the day. If I go back to the calendar for today, lots going on, my friends. So weak jobs out of Australia and the UK, as we said earlier this morning, although earnings in the UK were still quite robust at 5.8%, but down from the revised higher again last month at 6.1%. Unemployment rates in both countries remained the same, 4.1% in Australia and 4.4% for the United Kingdom. PPP out of Germany was weaker than expected as more disinflation chatter. In Switzerland, they cut rates by 25 basis points to 0.25 of 1% from 0.5 of 1%. And the head of the Fed, the head of the the Swiss National Bank, talked about monetary policy being appropriate in the right sort of time frame. So inflation is in hand and seem to be in the right frame once they've cut it again, so they feel confident enough to cut rates back again. Remember, the Swiss for many years had negative interest rates. Bizarre monetary policy, but there we go. Just half an hour ago, we had the Bank of England maintaining rates at 4.5% as expected. The rate, the only surprise was one member of the MPC looking to cut rates by 25 basis points. Mr. Ringer, but she's been a bit of a hawk for a while. Ms. Mann has gone back to being more of a restrictive policy. So talk of restrictive, talk of being appropriate measures from the Bank of England as well as things move on. With just the data out of the US has just been relatively dollar positive. The continuing claims is the only fly in the ointment as it's continuing to tick back to the 1.9 million. But the weekly claims remain very robust around that 220,000, 223,000 came in today. And Philly Fed, less market moving, but better than expected. Not as good as last month, but better than expected at 12.5 from 8.8 and down from 18.1 last time. So overall, we've got gold having made it a new all-time high this morning, cooling a tad. Dollar's stronger today, as we've seen with the euro, 108.35. And indexes, dollar having had a good day yesterday, where the Nasdaq gained 1.41%. The S&P was up 1.08% at 60 points. It's 5675 yesterday. Pre-market, they're down. Here the S&P is into its 50-hour moving average, is bounced off that at the moment. The Dow, which we've also got open position on, also into its 50-hour moving average, finding support today. Will that hold as we move into the as the cash session opens in an hour's time? We shall see. And sterling, or the FTSE, is also down for the day, but off its day lows at 8,664. We're back to 8,086, which is where we got in on the just below where we got in on Monday, but we're out of that trade. So we continue consolidating. You see that on that hourly chart at highs, which is relatively positive for the FTSE. And finally, DAX continues to move lower. So we've pushed a low of the day of 22,836. So we're out of the money on that one. From Monday, I haven't been in the money, but that's trading for you. And again, a bit closer to the stop loss than we were earlier. So take care, everyone. We'll see you tomorrow for Canadian retail sales and a wrap up of the week. If nobody's got any other assets they want to look at, whatever it may be, I'll call this a day and see you all again tomorrow. So see you soon. Take care. And as ever, may the pips be with you, my friends. All